Dropbox announced their Q2 results late last week, which saw EPS of 51 cents, which was better than expected and beat estimates on Wall Street of 46 cents. Revenue grew roughly 9% year over year to 623 million compared to estimates of 614 million. Total annual recurring revenue ended at 2.5 billion. That represented a 7% year over year increase. Paying users ended at 18 million compared to 17.37 million the same period a year ago. So the key metrics that they discuss all beat Wall Street estimates. And the CEO, Drew Houston, had the following to say. In Q2, we delivered a solid quarter, beating our guidance across all metrics and introduced exciting AI-powered products, experiences to our customers. Now, to me, Dropbox is a commodity, right? It's a cloud storage company. Yeah, I'm sure they do other things, but their bread and butter is storage. But it's a commodity, and you're competing with the likes of AWS, Google, and a handful of other companies out there. So, with that said, we got the fundamentals out the way. Let's look at the technicals, and yeah, it's safe to say on the monthly chart, the chart is suggesting that price did bottom at we'll say $20 even, although we had dips below that support line. We didn't have any closes, and since then, actually since May, price has been on the run. Now you can see that right now we have an indecision candle for August, and we had one also in July, and rightfully so. After 2 straight up months, explosive extended range green candles, you're going to get a pause in price. I think the other reason why it's pausing is because there are some headwinds above current price, starting at the $30 level. And if you can see right above the $30 level, you have these huge wicks, and price sold off in that area because of the huge wicks that was established back in 2018. So let's go to the weekly chart. Now again, the momentum is to the upside. You can see price did bounce off of the, or I should say, respecting the 13 simple weekly moving average, and it ended the week in the green. Just looking at this area here, with on decent volume, but the real sellers are above. Let's drill down to the daily chart, and we can see that because of the good earnings, price did gap higher and bounce off of the 50-day moving average, which served as a short-term support level. Now I want to go look at current price, go up and to the left. Okay, so you have some sellers here at the 28 to 28.50, but the origin of the strong move down occurred a little bit above, starting between $30 and $31. So after the gap up on Friday, price did pull back, just some profit taking. But regarding Dropbox, I think the upside is limited. If you are in, great. Maybe take some off at $30 if price gets to that level. If you are considering getting in, wait for further pullback, as the risk reward is not favorable. If you get a pullback to roughly the $24 level, that would be an opportunity to potentially go long. At that point, potentially you'll have the 100-day and the 200-day moving average moving up, which should serve as dynamic support. So that's what I got on Dropbox. It's one of those OGs, not going anywhere, but no touch for me. Thanks for watching. Subscribe, please. Like the video.